Good morning. It is 7:14 a.m. Friday, October 28th. Here doing my pre-market analysis and trade ideas video. Starting with the economic calendar, see that overnight we had the Japanese yen, or the Japanese BOJ press conference and interest rate. If I go back and show the whole week, because it was overnight. Let's see right here. Yeah, right here. Yeah, so overnight we had the BOJ interest rate decision that kept it negative. And overnight in the headlines, they mentioned that they are not thinking of tightening policy. So far, they're keeping very loose monetary policy. They're going to keep and even increase bond buying programs here. So very dovish approach from the yen here. Also overnight was the PPI of the Australian dollar, and that was also pretty significantly higher than previous as well, showing a lot of inflation still globally. Now today in the New York session we have core PCE, which is another measure of inflation that the Fed does look at, expected to see an increase. We did see an increase in the CPI, and we're looking at potentially having another increase in the PCE price index. Now, knowing that inflation is the number one priority for the Fed right now to bring it down, so having a higher than expected, or even within this range of 5.2 or higher, anything higher than previous, really, so anything above 5, I would say, in my opinion, shows an increase in inflation, meaning the Fed's going to keep needing to be really aggressive, raising rates to fight and combat inflation, and this is going to have a negative impact on the stock markets, on risk assets, and a positive impact on the US dollar. So if the opposite occurs and we actually have a smaller than anticipated rise, or PCE is below 5%, similar to previous, or even below previous, well, then we're going to have the opposite effect. If inflation is actually dropping, which I don't anticipate we're going to get that based on several factors, but if we do get a drop in PCE for some reason, well, this is going to be a surprise for the market, and we're going to have some repricing to do. So we're going to have some volatility and actual strength coming back into the stock markets, strength coming back into risk assets, into gold, into oil, into risk currencies, and weakness coming into the US dollar. So this is going to be an important data point here to watch out for. Anything else? We've got personal spending expected to maintain similar levels. This is showing again the strength of the consumer, and we've known from the consumer sentiment, several weak consumer sentiment reports showing that the consumer is actually becoming a little bit more cautious. Credit card debt is through the roof. The cost of living, the cost of servicing debt, everything is through the roof with inflation and rising interest rates. It's just not a good combination for the regular average citizen. So not looking good for personal spending. We'll see if that has any effect here. And also at 10 a.m. we have data coming out at 8:30, and we also have data coming out at 10 a.m. Michigan consumer expectations. Consumer sentiment, expecting similar to previous, so this is going to have another effect, as well as the personal spending. There's Michigan consumer sentiment and expectations, and pending home sales. So we're going to see, we're going to have, this is the last bit of data, important data coming in before the FOMC statements and interest rate decisions coming next week. So this is the last bit of information that the market's going to digest before the Fed has a chance to address the markets. So important data come in for today, and so far we're seeing some weakness across the board on equities here. So we were looking at this key level here, 38.82 here. Here, let me zoom out for a second. Let's get to the 4-hour real quick. Actually, let's start with a daily time frame. So we've been, obviously, everyone knows here that we've been in a bear market, right? We've been consecutively creating these lower lows and lower highs. And just recently, we've had some double bottom on the higher time frames near these higher time frame lows around 36.36, and from this double bottom we've entered another pullback phase, and we've come to retest the significant previous lows here from this most recent bearish run to the downside. So this is a significant level in the market here around the 3,900 level that we actually came in to retest within this pullback structure, and we've had initial reactions and sellers coming back into play here. Zoom into the 4-hour. We see a little bit more clearly here that we did break above these previous highs, 3,800. Very briefly, we had that tap of the sell side liquidity zone, continued into the range, and then we finally had a break to the downside, break back below this 3,800 key level. So based on this price action, based on the fundamental bias of stock market weakness, I'm expecting the Fed to come and shatter any hopes that people have of the Fed slowing down, because there is no evidence that the Fed's going to slow down. There's zero evidence. Actually, the opposite. Right? So this is a delusional pullback based on people hoping and praying that the Fed is going to slow down because there's going to be a recession, yada, yada, yada. Whatever the reasons are for thinking they're going to slow down, it's not going to happen. Why? Because the Fed has said time and time again that they need to bring down inflation. That's their number one priority at all costs. The labor market is still strong. Inflation is still way too high, 8.2%, when their target is 2%. They're going to continue to raise interest rates, and they're going to keep them there for a long time until inflation comes down. So there's literally zero reason for the stock market to be bullish at this time. So the FOMC is coming out with their interest rate decision in November, highly anticipated to be a 75 basis points rate hike, and investors going to be watching for any signs of slowing down in their prepared statements and in the press conference by Jerome Powell, where again I believe that they're just going to get shattered. Their hopes and dreams are going to get shattered, and we're going to see stock market bears come back into play here to revisit these lows and potentially create some new lows in the markets here, as this pullback structure is just part of the market waves, a bear market rally for sellers to jump back in at premium prices and continue into this bear market. So the US dollar is having a reversal here, right? So without having to zoom out, we know that the US dollar has been extremely bullish on these fundamentals of this rate hike and this hawkish Fed. But we've had, from these significant highs, 113.5, foreign governments start to sell off US dollar reserves to try to stabilize their currencies. We've had continued weakness, short-term weakness for a few days, a few weeks. Actually, probably just 1 week, but we've had significant downside here. But we've just come to retest significant levels in the market, still maintaining above higher time frame bullish structure, this weekly break of structure around 109, retesting some demand zones here and starting to see some bullish price action here. New higher highs, breaking above previous highs here, consecutive higher highs and higher lows, And just over the London session, new higher highs breaking above our daily key level, breaking above previous lows here. So we're showing some strength in the US dollar to finish off the week here. So I think investors are already pricing in that, well, you know what? The Fed slowdown is a little bit of a pipe dream here, and it's probably most likely not going to happen. And we're seeing US dollar bulls come in anticipation of this hawkish Fed, and we could potentially, starting next week after the FOMC, make our way back to the upside here. So for the time being, based on the fundamentals, based on current market sentiment as shown on the stock markets, as shown on the US dollar, I am playing this US dollar strength and this the fundamental bias coming back into play here. As stated, we are currently a little bit bullish on the day here on the US stock markets pre-market. UK is also slightly above zero. DAX is negative, and the Hang Seng is negative. Australian dollar is negative. US dollar is the strongest currency of the session so far, stronger than all of its peers here. The yen is the weakest currency, and we've discussed that overnight they had kept rates at negative. They reaffirmed their dovish stance. They said they're going to even increase bond buying programs. So this is extremely weak for the yen, and we're seeing that weakness across the board here. And the pound is relatively mixed, just weaker. Oh, it's actually pretty strong. None of the it's up big against the yen, and we know why. It's pretty much flat on the US dollar and against the euro, and it's stronger against the CAD and the Australian dollar. So a little bit of a mixed sentiment, I would say, for the pound so far, holding a little bit of weight here as it's almost neck and neck with the US dollar, which is really strong. But going over into our charts here for trade ideas on gold and GU, starting with gold here, I'm liking the bears coming back into play here. Obviously, we're playing this bearish structure, and from these new lows here, this pullback into the previous sell-side liquidity zones around the 1720s, we've seen the sellers come back into play to retest these lows, and then the pullback created this high here, higher low, failure to break these highs here. And where are we retesting? Well, previous liquidity zones, high volume area, retesting here and seeing sellers come back into play with this a little bit of a double top here, and we're coming back to the downside, respecting the bearish structure. So I'm really liking what I'm seeing here on gold here. So now on the 4-hour time frame, from these lows that we identified on the higher time frames, we entered this pullback, create a higher high, higher low, barely printing a new higher high, immediately getting rejected back below these highs, retesting previous sell-side liquidity zones here, and forming some lower highs, lower lows, another lower high, new lower low, breaking structure here onto the downside. So this is showing some bearish qualities here on the 4-hour and the higher time frames. So I'm looking to play this this bearish structure here. Now I'm going to delete this level here. This is not significant right now. I'm looking for retests here as we're seeing the sells bring new lower lows here and starting to have multiple rejections and seller exhaustion at these lows. Looking to see pullbacks come in, potentially to retest previous lows here, 1654, 1655s. Could even come up to these candle body lows here around 1658. Still looking for sells in this zone. So I'm looking for price to retest this general zone here, and and to see on the lower time frame some signs of exhaustion, signs of sellers coming back into play to ride these sells back to the lows, and potentially, if we can break this significant level here, to continue to the downside, riding the wave back down to the lows, given the US dollar strength, and seeing if we can ride that potentially through to next week if we have enough volume and volatility. But again, FOMC's next week. We're not going to see extreme volume in the markets until we have confirmed sentiment from the Fed and Jerome Powell himself. So it is Friday. It is the last day of the week. It is pretty much the end of the month as well. And we are waiting for the FOMC. A lot of investors are waiting on the sidelines here. So not expecting huge volume and volatility, but I do see that we have a clear bearish sentiment coming into play here, and looking for a potential setup here. Break, retest, rejection in this zone, looking for those sells on gold. Now finally, GU is a little bit more bearish in my opinion, bullish, sorry, in my opinion. Well, based on the structure itself. Breaking above previous highs here on the daily time frame, creating impulsive new highs, and it's more bullish based on the UK and the pound individual strength from the optimistic sentiment played, basically because of the new UK government and basically correcting a lot of the fear and uncertainty that the previous Prime Minister Liz Truss basically created a shit show, and we're starting to recover a lot of that here. So individual pound strength. So I'm not looking to rush into any sells, especially above this zone. Even this break is break to the downside. On the 1 hour, we see this more clearly. Even this break to the downside is getting corrected, and we're starting to close back above these zones here. So a little bit more indecisive on the pound. I'm not looking to take any trades on pound USD today, based on we're still respecting this bullish structure above 1.15, above this overall daily higher time frame liquidity zone, but we are within this bearish pullback, right? So we have bearish structure on the lower time frames, but bullish structure on the higher time frames. So, and the US dollar individual strength for the time being. So the pound and the US dollar are both strong individually right now. So I'm not looking to take any trade, as there's no clear one-sided volatility and strength here. Now, if we see the US dollar completely reverse its strength and we see some breaks back above these previous highs here, then we could see that continuation move. But if we don't break above these highs, we could very easily just have some mess and retest the highs, reject the downside again, and just be stuck within this range for a little while here. And that's not unlikely, knowing what happens on the pound USD, especially when both currencies are strong or both currencies are weak. There's no clear sentiment. We're going to have some choppy price action. So I'm not looking to spend too much time breaking down pound USD, as I'm not looking to take a trade on a Friday with this mixed sentiment, just focusing basically on this one trade idea, gold break and retest, or if we continue and break below this level as well, looking for breaks below 1645 or retest sells of 1654 to 1658 general zone here. So that's it for the trade ideas today. Again, we have some PCE data coming out at 8:30, so it'll be most likely the best idea is to wait for this data to come out, and if it aligns itself well with the US dollar bullish idea, then these gold trade ideas are going to work out much better. So I'm going to be waiting for confirmations with data and confirming with the equity sentiment in the US dollar strength to see if we're going to we broke, and to see if we're going to create some support on bullish structure here.